Today we are going to dive into how tokenized insurance works, why it could change the insurance industry, and what it means for policyholders and investors.
We trade insurance policies like any other asset, so why exactly do we need a token for this?
Here's how it works.
By the end of this video, you'll understand how blockchain technology might very soon allow investors to trade insurance policies like any other asset, but more importantly, also how it could make claiming payouts a much easier task. So, what exactly is tokenized insurance? Before we get into that, let's quickly explain what tokenization means. Tokenization is the process of turning rights to something valuable into a digital token that you can trade or hold on a blockchain. In this case, the thing being turned into a token is an insurance policy or the chance of a specific risk happening, like fire or theft. If you would like to learn more about tokenization, we have an entire video on tokenizing real-world assets, which you can find in the upper right corner.
Here's how it works. Policyholders can buy tokens as insurance coverage. For example, if someone buys a fire insurance token, it covers them for fire-related damage. Alternatively, people can buy tokens that give them exposure to the risk itself, kind of like investors in the insurance pool. People can buy these tokens not because they need insurance, but because they want to invest in the risk. If no claims are made, they make a profit by receiving a portion of the premiums or from unclaimed payouts. This allows for the creation of new financial products where investors can spread their money across different kinds of assets, including ones that aren't tied to the stock market.
So why exactly do we need a token for this? Using tokens in insurance is all about three things: efficiency, flexibility, and financial innovation. Let's break it down. A token can represent an insurance policy and it can be traded or transferred easily on a blockchain-based marketplace. Second, a token can represent a small part of an insurance policy or risk pool, allowing multiple people to own a portion of a policy.
With tokenized insurance, investors can buy tokens that represent a share of an insurance pool, like fire insurance or life insurance. These tokens can generate profits if claims are low or if the pool is managed well. Plus, with tokenization, everything can be automated thanks to smart contracts. This means that when it's time to pay out a claim, the conditions are enforced automatically, without needing middlemen like insurance agents. Tokens also provide secure and transparent proof of ownership on the blockchain. That way, everyone knows who owns the policy and there's less risk of disputes over ownership.
Tokenized insurance can be bought and sold across borders more easily because blockchain is global by nature. This opens up opportunities for people from different countries to invest in insurance products that they normally wouldn't have access to. But how can policyholders benefit from tokenized insurance? One major benefit is automated claims handling, which is super important in situations like a fire. Right now, after a fire, it can take up to 120 days for policyholders to get paid. It leaves them in a tough spot when they need cash to quickly find a place to stay and begin rebuilding their house. With tokenized fire insurance, the payout process can be automated and triggered instantly when certain conditions are met, like a verified fire report. This drastically cuts down the waiting time, making sure policyholders get the financial support.
Another example, life insurance. One of the key reasons for tokenizing life insurance is to ensure that beneficiaries are notified when a policyholder passes away. Beneficiaries sometimes don't even know they are entitled to the payout, which leads to many unclaimed policies. But there are risks we need to talk about. One big risk is cyber attacks. While blockchain itself is secure, the platforms that store and trade tokens can still be hacked. If that happens, policyholders could lose access to their tokens or even face fraudulent claims.
Another risk comes from the fact that regulations around blockchain and tokenized assets are still evolving. Tokenized insurance could face challenges with meeting the current insurance laws, which were made for traditional systems. Different countries might have conflicting rules or might not fully understand how tokenized insurance works, which could cause delays or compliance issues. Additionally, private keys are used to access tokenized assets. If a policyholder loses their private key or it's stolen, they could permanently lose access to their insurance policy or investment.
Several companies are already working on tokenized insurance and pushing the limits of this technology. Infinio has tokenized over $125 million in life insurance policies on the Provenance blockchain. Their system ensures that beneficiaries are notified when a policyholder passes away by recording the policy's details on a public blockchain. Infinio also plans to create a marketplace where people can trade life insurance policies and offer loans with policies used as collateral, which means people can borrow money using their insurance policy to secure the loan.
Schroders Capital, in collaboration with Hanover Re, launched a project to tokenize insurance-linked securities, specifically focusing on reinsurance contracts. Reinsurance is basically insurance for insurance companies to protect them from big losses. They use tokenization to make trading these reinsurance contracts quicker and easier. Smart contracts help automate payments where real events like natural disasters happen. Nimes is another company that have built a platform for crypto-native insurance. They recently got license from the Bermuda Monetary Authority, meaning they can participate in the market as a fully regulated digital insurance platform. They offer tools to set up digital insurance programs and allow investors to participate in insurance as a type of investment.
What do you think about tokenized insurance? Would you invest in insurance risk? Let me know in the comments below. And if you enjoyed this video, please subscribe to our channel. Thanks for watching on the blog. We'll continue exploring the world of tokenization, so don't forget to hit the bell button to stay updated on our future videos. Until next time, this is Dominik
And this is Przemysław, reminding you to stay on the block to stay ahead.